Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's take a look at the four major indices because we've got some volatile action right now. You see the S&P 500 mini futures right there, up 1% on the session. Oil, during the break, just came off another dollar. Here you see the four major indices right here. NASDAQ now up 1.4%. Russell 2000 up nearly 2%. Dow Jones Industrial Average up over 1%, and the S&P 500 sternly in the green. Looking for some headline numbers. If we can get the futures up there too, guys, kind of like to take a look at that because, as I mentioned, crude oil fell below. It's right at 123 a barrel at this point. Bonds are at their lows of the session. Gold came off 1% while we were on break also. Gold's only up about 2.5% now. There you see the crude futures starting to fall as equities rise. I haven't seen any news yet. And now you got the VIX down over 4% on the session. Dollar index continues to fall as we speak. And the Bitcoin futures up nearly 4% on the session. But Kev, now let's bring in our next guest for our cash tag segment. And that's going to be Megan Brantley, the Vice President of Research at LikeFolio.com. Welcome to the show, Megan.
Thanks for having me, guys.
Yeah, so, I saw that Stitch Fix was reporting earnings. I know that you guys do some data and consumer sentiment extraction of data on this company. It's fallen over 80% from year-ago levels. This thing has just been a falling knife, Megan. Do you have anything positive to say about Stitch Fix? Because the stock says no.
I think the most positive thing that I have to say is that the bar now is very low for Stitch Fix, right? And when we look at some of these consumer macro trends, we would expect there to be major tailwinds for a company like Stitch Fix. We have a lot of people who are returning to work, returning to the office, resuming business travel. We have a lot of mentions of people going to a bar or restaurant. Those are up 58% year over year. We have lots of mentions of people going to music festivals and concerts and entertainment events, things of this nature. So all of these things should indicate that consumers are, finally trading in those yoga pants and putting on real clothes again. And obviously styles have changed. And that's the value prop that Stitch Fix tries to bring to consumers is this element of personal styling, this, we'll do the shopping for you and we'll send you these clothes to save you time and things of that nature. But you can see on this chart, that green line are mentions of people who are talking about actually signing up for using the Stitch Fix service. And you can see that for years now, we've been tracking a decline in that growth of consumer demand. And unfortunately, we're not seeing any type of, resurgence or, maybe a spark from some of these tailwinds as people need, real normal clothes again. We actually have demand down 47% year over year and 23% quarter over quarter. So from our perspective, heading into this earnings, this isn't one that we're necessarily wanting to bet on, I would definitely say. Partially, maybe silver lining is, looking at that green line, you may expect our earnings score to be, really, really negative. But the slope of that has started to, flatten out a little bit. So that rate of deceleration of demand growth is kind of flattening out a bit. And so that has us, cautiously bearish ahead of this next earnings event.
Megan, I can finally be positive again about something. After talking about crude oil and the economy for the last 20 minutes, I can be positive. And you want to hear my positive statement? At least you can see the ground right now when buying Stitch Fix stocks. It's $10, right? Tom White and I buy more expensive options on this program, and now you can buy a stock for the price of an option. So there's my positive spin on this. Although, here's my question to you, Megan. Your other chart, your total mentions versus sentiment.
Yeah.
Rent the Runway is relatively new company, correct? Newly, I've never even heard of. I've heard of the other two, Trunk Club and Stitch Fix. Is this just a case of, these two newer companies doing it better and taking market share away from the two older companies? Because that's what it looks like on my screen.
Yeah, so Stitch Fix and Trunk Club, who's owned by Nordstrom, these were the first players to this whole concept of,
Right.
having a personal stylist and someone will pick out clothes for you and ship it to you. And this seemed like a really cool concept a few years ago. Now, Nuuly is actually falls underneath the Urban Outfitters umbrella. So think about Free People and Urban Outfitters and Anthropologie. And what they have done is they've allowed people to kind of rent these clothing items. And then if you decide you like it, you get to keep it. If not, you send it back. Rent the Runway has a similar model of, the user actually goes online and picks out the different clothing items that they'd like to rent. And then maybe if they like it, they purchase it. And if not, then they send it back. But you can see that there's, a big distinction between this concept of personal styling versus the concept of, a consumer actually picking out the clothes that they like for themselves. I think that, while it's nice to think, oh, how convenient would it be for someone to pick things out for me, that doesn't necessarily always play out, at least in our mentions when it comes to consumer happiness. Whenever I was looking at some of those sentiment mentions, and you'll notice that Stitch Fix is on the lower end of that outlier grid. And, you want to be to the top right. You want to be the Nuulies and the Rent the One Ways if you're looking at that chart. One of the top mentions of that negative sentiment were people saying, I'm just really not liking the clothes they're sending. I'm not finding value in the items that are being picked out for me. I think one tweet that I read that made me laugh said, Stitch Fix, no polyester means no polyester. So I think that, there's just a gap there as consumers are kind of trending more toward this concept of being able to rent the items that they like and then potentially buy them. Not included on that chart as well. We're also seeing a rise in a lot of these fashion sites. So things like Shein, things like Topshop, things like ASOS, these brands that are providing consumers with really on-trend fashion items at a really low price. And this is all online as well. So if you will, it looks like Stitch Fix has lost its edge. And so far, we're not seeing signs that it's really getting its groove back yet.
Yeah, complete disclosure here, Megan, tried the service. And you're right. Their complaints, from some people that post things on social media are probably correct because about 3/4 of what they send isn't maybe the brand or the style that I would normally wear. And I get that the whole point is to kind of, go outside of your bounds that you're comfortable with, right? And things that are popular. But now, have you guys seen any data on their new segment, which is Freestyle? Their service where it allows customers to experience shopping directly for brands that they love. So now that would probably equate to more engagement, I think, and less disappointment from some, from some customers. So have you seen any positive data on the newly released Freestyle segment?
So that is one area that we looked into, and I think it's interesting that they're starting to allow this. They're starting to kind of copy these peers that are succeeding and allowing consumers to select directly the types of items and brands that they'd like to receive. But so far, at least in our data, that sample size is still really low. We're not seeing that move the needle very significantly overall. So far, that hasn't been, a major, green light or check in the pro box. But I do think that long term, if they can leverage this site, this is the most likely avenue for them to have some success and start to grow again would be to begin to leverage this portion. We're just not seeing it move the needle just yet, but it could still be very early.
Hey, Kev, did you have a follow-up?
So Megan,
here?
I have one more quick question.
Yeah, go
I have
ahead.
one more quick question. So you guys, you and Tom were just talking about they send you clothes, you pick some out, you send some back. Do we know what the percentage is of clothes that are kept? Like Tom, you said you did this for a while. What percentage of the clothes do you think that you kept? Megan, do you have any numbers on what the average is for the amount of clothes that are accepted versus returned?
We don't have any numbers, or I'm not aware of any numbers off the top of my head. I do know that they provide an incentive for you to keep everything. I believe there's a discount applied if you decide to buy everything in the package. But most of the time, I think, at least in the mentions that we look at, that's pretty low. Tom, I'm curious about your experience, though. How likely were you to keep all of your items?
Unlikely, highly unlikely. No, probably about 20%. There's a couple neat things that, I typically wouldn't buy, but at the same time, it becomes a hassle, right? And then, you have to put stops on the number of times that that you don't want to get a new package, things of that nature. And then during the pandemic, you weren't wearing most of them anyway because you weren't going out that often. But Megan, if you look at this, Now with the reopening, it seems like COVID's been pushed aside. The numbers are way down, and people are just going out like crazy in Chicago. Do you see there's any incentive that maybe that downward trend that you saw in the first chart that you showed us is going to turn or at least consolidate?
I think that that deceleration is starting to soften a little bit, but it's still, 47% decrease year over year is a pretty substantial decrease, at least in our universe. So we're not seeing this, massive reversal in consumer demand. I think in theory, there should be a lot of tailwinds that propel this company, as you mentioned, as people go out again. But I think that, there could also be some headwinds. Whenever we look at mentions of people shopping, we see some of those e-commerce mentions down on a year over year basis, but we see mentions of people who are actually going to shop and buy clothes in the store up on a year over year basis. So that could be kind of a headwind for Stitch Fix looking ahead. From our perspective, heading into this earnings event, we know that, especially with Stitch Fix, I think that there's a pretty large expected move. I think that they often have pretty outsized moves in regard to reaction to these earnings event. For us, our score is a negative 24. And so that whenever we look at these earnings scores, anything, plus or minus 20 is pretty neutral for us. And Stitch Fix is falling at a negative 24. This is one of those things where, we're very cautiously bearish just because we do know that there tend to be really strong earnings reactions for Stitch Fix specifically. But so far in our data, we don't have a lot of positive data points to back up a more bullish outlook.
Negative across the board on this, and your data has been spot on over the last couple years here. Great stuff as always, Megan. Have a great day.
Thanks, guys. You too.
All right, that's Megan Brantley, the Vice President of Research at LikeFolio, giving us the data breakdown on Stitch Fix.